central banking conference taking place today in New York City, and St. Louis Fed President James Bullard is wrapping up, just commenting moments ago. Brian Cheung is at Columbia University with some breaking news out there. Brian?
Yeah, well, we are here at the Central Banking Conference here in Columbia University in New York City. And a little bit of breaking news. We just had St. Louis Fed President James Bullard, who was speaking with media just now. He said that he is calling for a 25 basis point cut in the Fed's next meeting. Again, that is July 30th and July 31st. For those who aren't aware of the background of this isn't necessarily new per se. We've heard Bullard speak before in the past, saying that he has advocated for a 25 basis point cut and actually voted for a 25 basis point cut in the June 19 meeting. He said as background that the particular data points since that meeting have actually been pretty good, but they've been against the backdrop of a slowing economy, and said, quote, "You do have to ratify," end quote, what they messaged in the June 19 meeting, which was the option for a rate cut in the next meeting, saying that at this point, quote, got to follow through. So some interesting commentary from James Bullard. This is the last day of Fed speak before we go into what they call a blackout period ahead of the next FOMC meeting. So he will be one of the last Fed speakers to speak. For what it's worth, Boston Fed President Eric Rosengren is also scheduled to speak at this event later this afternoon, in addition to the Bank of Japan's Haruhiko Kuroda. So a lot of central banking talk here in New York, but a number of waves, again, as we head towards that July 31st meeting.
Hey, Brian, Emily here. I want to ask, just over the course of this week, we've heard from a lot of FOMC members, speakers, who will be voting at the end of July. What do you think has been the main takeaway? I mean, now we know where Bullard stands, but what do you think we should actually be looking for?
Yeah, well, I think Bullard, if you're hearing from him, you're probably wondering, well, he's probably one of the more dovish members of this voting FOMC. For the longest time, he has been calling for rate cuts and actually voted for one in the last meeting. When you compare that to Eric Rosengren or Esther George or Charlie Evans, who are also on the voting committee, you do kind of wonder whether or not they would lean more dovish than Bullard here. So maybe take some air out of a 50 basis point cut. What's interesting is that yesterday, New York Fed President John Williams actually spoke in New York City, actually at this event, and his speech was perceived to have been more dovish. It was actually supposed to be commentary on the last 20 years of monetary policy. The New York Fed actually had a clarification saying this speech actually isn't about what the next step for central bank policy should be at the next July 31st meeting. So there's a lot of noise, and that kind of speaks to the jitteriness of markets right now. Again, this is the last day that we'll get Fed speak. After this, it will go quiet before we get to that July 31st meeting.
Hey, Brian, it's Veronica. What did he guide to in terms of the biggest headwind he's seeing in the economy? Is it that trade issue? Is that his biggest concern to justify a rate cut? Because we're seeing good numbers when it comes to retail sales and wages, and the consumer is still very strong.
Yeah, well, he said actually, the data actually came in well since the June 19 meeting. But as you mentioned, trade obviously on the mind of a number of district contacts. That was reflected in the Beige Book that was released by the Federal Reserve earlier this week, where across the country, businesses were saying trade is something that's weighing on us. But what's interesting is that he said financial markets are really something that he's paying very close attention to, the inverting yield curve. Some portions of the yield curve have inverted, particularly the 3-month and the 10-year. But he said that the 2-year and the 10-year hasn't inverted yet. Those are generally perceived to be among the more liquid bond markets. So not necessarily a flashing indicator, but he says that he would like to lower rates to make sure that they can steepen the yield curve to manage market expectations going forward.
And I mean, you gotta expect that if the most outspoken dissenting voice in the Fed says 25 basis points, it's interesting to see how the rest of it will go. Brian Cheung, out of the conference, thank you so much for bringing us that breaking news.